Good morning and welcome back to the Coinbase Institutional Market Call. It is Thursday, August 17th, and we have got an exciting show planned for today. To give a quick overview of what we're thinking for today, as always, I'm joined by our stellar in-house specialists, Georg, David, Greg, and Sid, to walk through market news, events, macro flows, and DeFi. But deviating a bit from our normal segmented podcast structure, we're going to actually have a roundtable discussion through each of these topics and themes jointly today with Vance Spencer, our special guest for today. Vance is co-founder of Framework Ventures, a thesis-driven venture firm centered around the idea that blockchain technology enables permissionless innovation that fundamentally reshapes consumer and enterprise business models. I believe last I checked, he was managing somewhere a framework around $1 billion, and I believe with the latest fundraise of $400 million, half focused on gaming and half general ventures. We're going to hear more from Vance today on what this all means, and we're excited to spend some time together walking through Vance and Framework's valuation here at 6. Thoughts here on the broader macro picture as it relates to valuation and the importance of trading and fund flows as a driver for longer-term price action expectations. Before we jump into this week's discussion with Vance, to take care of some quick housekeeping, if you are watching on YouTube, don't forget to scan the QR code below to get access to all of David's wonderful market research, as we always say. And if you're a podcast listener, this information is posted in the show notes. Spreading the wonderful word that is crypto is a passion of everyone here on the call, so please don't forget to hit subscribe and rate our discussion, which is ultimately the best way for others to hear more about us and our podcast conversations. All right, with our announcements out of the way, let's dive right into the juicy stuff. Vance, welcome.
Good morning.
Good morning. And Vance, just to give you a bit more context on the type of clients we work with, our desk here, we speak with a broad range of market participants, right? From traditional hedge funds, asset managers, to crypto native VC and funds that share very similar profiles to yourself and Framework. And I think while there's so many different client types from firsthand, I think, one question that we see very frequently is ultimately, what is the best way to value crypto assets? And what are some heuristics in determining whether a price is cheap, fair, or expensive? So do you mind please sharing with us as a first starting point of this conversation, how you look at valuation, how you look to assess the attractiveness of a particular token's price?
Sure. So, there's thousands of crypto assets that exist today. And frankly, there's probably about 5 to 10 that have fundamentals that you could value them on. And so, first of all, some people choose to see the thousands of coins that may have failed or didn't get to product market fit or didn't get to the point that people wanted them. But I choose to see, the 5 or 10 that are really doing interesting things that really have fundamentals. And I've spoken about this at length and tweeted about it a little bit, but I do think the FANG of crypto is starting to assemble itself, and, or at least the FANG of DeFi. And if you think about, how to value these things, and we can get into what the assets are in a little bit, it's frankly the exact same way that you value any company. It's just a price to earnings multiple. If it's an unprofitable protocol, you could do it on a revenue multiple, same way you do SaaS valuations. But the point is that there's not very many of these things that have fundamentals, but the ones that have them are compounding extremely quickly. They have a very strong defensive moat, and they're highly levered to the blockchain economy. And so, just to take one of these, and we can go through the other ones, but, there's a protocol called Maker. It's a decentralized stablecoin. They have about $3 billion of assets on their balance sheet, which they've invested into treasuries. They have a collateralized lending business for crypto native assets as well as real world assets. And then they have a financing arm for things like bridge loans for construction, and other real world, lending use cases. Maker has about $160 million of revenue. It has about 20 million, 30 million of expenses per year. And it trades around $1 billion, 1.1 billion. And so it's literally trading at a 9 PE. And the earnings this cycle are likely to get to 300 to 400 million. I don't think we're doing anything that's, there's no like gigabrain math involved here. These are just cheap crypto assets that don't have natural buyers. And there's a few more of these examples, but I think what we're good at is we've always done our book about half liquid, about half, privates. But there's times like now and times like last year where things just blow up and these things just get so cheap. And that's kind of where we're orienting ourselves right now.
Got it. Yeah, very interesting. I guess so. I mean, you kind of touched on this now. But where do you think we are in terms of today from a risk reward analysis? Like, do you feel like the market has sufficiently de-risked itself and de-levered itself? And are we seeing that in price action today, or how do you find valuations today?
So the nice thing about the valuations in this space that isn't really comparable to traditional technology companies in a favorable way is that the profits that are derived from, protocols, whether it be Ethereum, whether it be Maker, whether it be Lido, they're usually going to buy back the actual native tokens, or they will be in the future. So, like if you think about something like, a traditional technology company, like there was a story about Databricks the other day, where they had made $3 billion in revenue, but had $4 billion in costs. That's a strange asset to me, because there isn't as much of a point to it as something like a Maker or a Lido, where at least for Maker, they're going to buy back $180 million of their tokens this year. And so I think, the valuations being cheap or expensive, at least in crypto for me, is a function of, are there buybacks? Is there something like EIP 1559 for Ethereum that burns 80% of the fee supply, making it deflationary? I think you can handicap the valuations in crypto as being, at least on a fundamental basis for the right coins, more cheap than traditional tech equities. Flows are pretty low, liquidity is pretty low, sentiment's pretty low, but you have a lot of these things starting to build real businesses. There's starting to be a real access to them with the ETFs. And so, we're optimists, obviously, we're crypto bulls, but I feel very comfortable sleeping at night knowing that we're getting pretty good deals on what we're doing right now.
Nice. Good to hear. Greg.
Yeah, Vance, thanks for joining us today. And it's great to hear that you're applying, a more traditional valuation framework to crypto assets. Question that comes to my mind is, we're obviously in a very interesting macro environment. We have rates at 20-year highs, and these rates have, in effect, helped some of Maker's book, but I guess the larger question is, how does this new macro regime change the way you look at any of these crypto assets, or maybe position your book?
For the certain assets, Lido is an example of something that's extremely levered to the crypto economy. It's levered to the price of Ethereum. It's levered to the fees of Ethereum, and it's levered to its market share growing as a percentage of the liquid staking market. And that is a very different investment than Maker, which, I see interest rates going up and it benefits from the higher for longer mentality. If that's right or wrong, I think generally what I look for in macro is, and this is the 10,000 foot view, what is the dollar doing and what are interest rates doing? Interest rates are at, I believe, 15-year highs. The last time they were this high was the financial crisis in 2008. The dollar is at 25-year highs. And so, as an asset manager, these are the things that you're taught to look for in terms of a setup. And maybe it is higher for longer, higher forever. That just feels like the mirror image of, ZERP and TINA. And I think, sitting here, it's pretty obvious to me, at least in San Francisco, there's some sort of recession going on. If you look at China, the deflation it's shipping out of the country, that's going to hit us at some point. And so I think you can be constructive on the macro getting softer than it is today. And it's all relative. The Fed not hiking is easing compared to it hiking 25 basis points a meeting. And so I think I'm comfortable with a year out view of interest rates are probably lower, the dollar's probably lower. Things are generally probably more bid. And I think, it's funny, the understanding of crypto from crypto native players is that things haven't moved and it's been slow and all this stuff, but it's still outperformed the S&P and QQQ year to date. Other than a handful of tech stocks, mostly benefiting from the AI run, crypto has been the biggest net beneficiary of liquidity snapping back. And so I think, the Paul Tudor Jones line is, the fastest horse. Crypto still is that. And if you think the macro will soften at all, I think it's a pretty good place to be looking at. The other thing I'll say just briefly is, what is the macro narrative? And I think a lot of the things that I see a year out, I think inflation is the main one now, obviously, but I'm really not concerned about inflation. I think the macro narrative that's going to be interesting is, I was in England when the Liz Truss government fell apart, and when the gilts blew out and the great GBP weakened a lot, And just seeing that type of, activity with the backdrop of, the fiscal debt where it is. And you look at the Argentina presidential candidate, and he's a guy that's, if people don't know who he is, he's promised to abolish the central bank and dollarize the economy. And he's kind of making the same argument that Michael Saylor made in 2020, which was this is entirely unsustainable, and it's not quite the same argument as Michael Saylor, because he's just a guy that's pointing out the obvious. Argentina was the 10th richest economy in the world in 2003. It's now 140th. They've had 100% inflation year over year since 2004. Like, the central bank just isn't working. And so I think that is going to be the background macro narrative of, how sustainable is all of this? And I think that's conducive for crypto assets, at least in my opinion.
I love that, Vance. And I like the fact that you're getting into a more of a global view about this rather than something that's a lot more US centric, which I feel like is the flaw that a lot of people's investment theses kind of rest on. But, let's kind of just stay with the US for just a moment, because, I think there's a short-term view and there's a long-term view. As you correctly pointed out, inflation tends to be what people are focusing on right now. And people are very much focused on that question of where does the Fed start to see the need for rate cuts? And certainly, like 3 board members recently opened that up just in the last 2 weeks alone. But I think the challenge is, there's arguments of both sides for where inflation's going. Some who believe that it's going to come down. Some people believe that it could still spike up because of food prices, energy, what have you. How much does that actually factor into your decision making right now? And then if you go longer term, I do think that, we're looking at fiscal expansionary monetary policy, because the government's going to keep borrowing more. As you mentioned, there's a debt problem here. I think ultimately you're going to see that the Fed's going to need a cave because they're going to have a ton of debt service, and they're going to have to deal with some of the secular deflationary trends that we're seeing. How does that kind of shift in terms of what you see for the potential investment horizon? So the short term and the long term kind of thesis.
Sure. So I in the 1970s, if you think inflation will continue to be strong, gold rose 2,800%. It was the top performing asset of the decade. And it was just this interest of people into things that, cut across the grain of what they saw as a system that wasn't working for them or working at all. And if you think it's going to be deflation in the next 12 months, that means rate cuts. That means, probably QE. That means, stimulating the economy. And so I see a path for crypto in both scenarios. I will say, I don't think that macro is going to save crypto alone. I think it's going to enable Bitcoin to break through new all-time highs and do all of that. But that's not really what we're playing for. We are going to build products. We are going to invest in products. If you look at the things that are happening right now in crypto, whether it be, DeFi incumbents that are really starting to generate revenue and throw off cash, whether it be TradFi looking at this asset class and saying we can tokenize all of our funds. There's $1 billion of fixed income assets that are on chain today, and it's growing about 30% per month. There is serious traction. There is serious product being built. And then on the other side of the kind of spectrum, there's games. And, the only game that's really kind of released and been at scale was Axie Infinity. And obviously it crashed, and, all of that stuff is bad. But there is a way to build a crypto game that's engaging to people. And at the end of the day, that's what a lot of people want to do in crypto. It's speculate, it's play money games, it's get financial services. And so I think that there is a path here to get so many more consumers, so much more activity, to get fees up, to get all of the KPIs that we track up. And the macro is just going to be something that helps. But I'm not holding my breath for rate cuts this year. Goldman says it could be Q2 of next year. I'm fine waiting for that. That's when the halvening is. But the exciting thing for me is how high the dollar and rates are. If you have an easing off of that, that creates so much leverage and liquidity and flows and momentum and, frankly, confidence. So either way, I think we'll be okay.
Yeah, I agree. I think there's going to be a confluence of events probably in the first half of 2024, probably more towards the end of Q1 or beginning of Q2. But I would love for that scenario to materialize. Going back to kind of what you were saying on the global side, though, I mean, this week, the big news has just been all around China, right? And it's been kind of contributing to this risk-off tone. We just got some news this week about the distressed Chinese developer Country Gardens, for example. They just missed $2 bond payments. Dong missed a few payments on a couple of products. Authorities are actively telling investment funds, hey, don't sell all your stocks right now. It's not exactly the most confidence-inducing kind of environment. I mean, do you think that, number one, China can get this all under control? And if not, is there a large contagion risk here for global investors? Like, what do you think crypto does in that scenario?
I mean, I think you can. I mean, I saw that headline last night too, which was China orders the banks and funds to stop selling stocks. I mean, you can either view that as a bad thing, which it probably almost certainly is, but it also has silver lining. Like, the easing is starting. They cut rates last week. They're going to do more stimulus. There was an article that talked about Chinese proclivity to give their citizens UBI, especially in the face of 25% youth unemployment. And that's something that's just like not on anybody's bingo card. What would a Chinese version of stimulus actually look like if you gave it direct to people? So I think there's some positives as well, but banks are starting to cut interest rates. Whether the U.S. follows next month or next year, I don't think really matters as much than the fact that we're now kind of at the start of an easing cycle. And I understand that it's been a rough 2 years for people, but I do think you have to have some confidence in, these are repeating cycles to some extent. Maybe they don't exactly repeat, maybe they rhyme, whatever it is, but there's help on the way, it feels like. And, whether you think inflation is going to stay here or not, in terms of going down, like, they're probably at the tail end or near the tail end of the rate cycle. So I think you have to just, stay calm, honestly, and bet that the same thing that's repeated over the past 100 years will continue to happen.
Thanks for that color, Vance. And I think just sticking a little bit to Asia here and China specifically, I know you spent some time in Japan, at Netflix in Japan, so I'm just interested to hear your thoughts on the region as well. Just broadly speaking, I've really been quite surprised at the development and the open posture that China has taken with blockchain technologies. And whether that's, I'm curious to, I guess, hear whether or not you think that there's, what you think about CBDCs, for instance, and Hong Kong's experiment with crypto, as well as, like, I guess, gaming in Asia. Obviously, that's a massive region in terms of gaming opportunities. So what's in focus for you in China, and how do you look at kind of the current state of things there?
Yeah, so, a global comment before I get into China. The thing that's striking to me, and I've, I was fortunate to live all over the world with Netflix and work in technology there. But when you travel to countries abroad, whether it be Europe, whether it be Korea, whether it be Japan or China or Latin America, the thing that's really interesting is that they kind of missed the Web 2 boom. There aren't really people who have made $1 billion plus companies in most of these countries. Spain is a decent example where there's only one unicorn. It was a unicorn as of 2021. It was $1 billion company that did food delivery. Most of the Web 2 wave was missed by these people. And so you look at the crypto penetration rates, you look at the excitement about crypto in these countries, and this is the first real wave that they've been a part of. Larry Fink calls, I think, Bitcoin and Ethereum international assets. Like, that really is what they are, but it's also in an international startup scene. Like, this is the best way for people to make it, to, really be a part of something, because frankly, like, the existing tech industry, I mean, maybe their talent is in most of these countries, but there is no ecosystem, there is no support. And frankly, a lot of the incumbents are already dominating and are frankly old companies that have very little to do with new innovation, new industries, et cetera. So that's at least my rationale for why crypto is so popular in so many new countries. It's not just an asset, it is the local tech scene as well. In terms of China, you in Hong Kong, if you go to the Forex counter in Kowloon, they don't quote you US dollars for FX, they quote you USDT. There's a lot of people using crypto assets for medium exchange, different types of monetary and financial services needs. And so it is really integrated. And, the tail end of last cycle was marked by China banning crypto. And there's images of the miners being ripped out and, kind of tossed out of the country. But now in Hong Kong, you actually have banks and a licensing regime and open access to mainland China. And so I think of that as just a turning back on of that spigot. And, if the yuan is really going to devalue, guess where those people are going to put their money? Those people don't have access to stocks. They don't have access to gold. They don't have access to a lot of the things that people in the US have. And so it's important to have that perspective. And whether they do a CBDC or not, I think what they're realizing now is that there's an article about, as I mentioned, UBI being given to Chinese citizens. One of the bigger reasons, other than just moral hazard, that they don't want to do it is they don't have any logistics to do it. Would they give it to the provincial government? Would they give it to, Ant Financial? Like, how would they actually mechanically distribute this money? And so I think, on a long enough time horizon, you will see CBDCs play an important role in things like UBI or welfare checks or stimulus checks. And China would, that would be another one on my bingo card that wasn't on the beginning of the year. Like, maybe they roll it to CBDC with real purpose and try to recapitalize their economy with it. It's not outside the realm of possibility in my mind.
Yeah, super interesting. Yeah, I didn't realize that that MTRs in Hong Kong were accepting USDT. That is shocking news to me, and such a quick change and super impressive. I guess we can turn, I think, to a conversation around flows here. I know, Greg, turning to you, I know that I saw news that the ARC21 shares BTC ETF app was pushed out by the SEC. Greg, what have you seen in terms of news reflected at all in flow expectations and otherwise kind of desk flows on our side?
Yeah, so flows have been light. The market generally is waiting for the grayscale decision. There were some news articles suggesting that we could hear this week. But again, the courts aren't bound by any specific deadline, so we'll have to be patient, and we'll find out when they decide to tell us. Now, while we wait, we have risk assets selling off. The S&P is off about 3.5% from its highs. Rates, as we mentioned earlier, have been moving up. So it's not a great macro backdrop for really any risk asset. And we're starting to see crypto recouple with traditional markets, which in my view makes sense. Absent any idiosyncratic news, we're not going to be able to trade in a vacuum. But I would say that the price action over the last few days has really been driven more by a lack of buyers than by aggressive sellers. No one that we talk to, at least, is really looking to reposition their book in a meaningful way, until we get these catalysts. Again, the grayscale decision, any movement on the ETF filings, Mt. Gox, we've talked about these at length. Now, if you look at positioning, it does look to me to be a little stretched in Bitcoin. If we go to the next slide here, you can see global open interest is near the highest levels we've seen for the past 12 months. Now, again, this makes sense. Bitcoin's really owned the narrative this year, and it has the biggest near-term catalysts. Again, ETF, grayscale, Mt. Gox. There's a lot going on in that space. ETH, meanwhile, the positioning there looks much more neutral. Open interest is closer to the average levels that we've seen in the past year. And again, it's really ETH lacking this narrative. We have Den Kun coming up in late this year. So that could get people excited. But between now and then, although the fundamentals look good, there's really not a lot to drive interest there. Now, I think this is actually an interesting setup, because if we go back to the beginning of the year, everybody was talking about ETH and had sort of forgotten about Bitcoin. And then we saw Bitcoin outperform. I think we may now start see a reversal of that, where everybody's so focused on Bitcoin, and ETH, meanwhile, has great fundamentals. And once we get that spark, we could see that asset catch up quite a bit.
Yeah, Vance, I would love to kind of get your take on what Greg just said, because I think if you've been long Bitcoin, or better yet, like long GBTC or something with a massive discount that's connected to Bitcoin, maybe you were doing pretty well this year. But do you agree with him that you think ETH still has pretty strong fundamentals here? And what do you think could actually be a catalyst for getting people back into altcoins?
I mean, ETH is the most interesting asset on the face of the planet, in my opinion. What other asset is deflationary, pays you 4 to 5% yield, can be used as money, can be used as collateral, and is reflexive and levered to the blockchain economy growing? I think it's just fascinating. And we are, I think, for lack of a better term, mega ETH whales. But you think about that asset and, fees increasing in a bull market, NFTs starting to get going, DeFi starting to get going, like the fees and the yield and the deflation are only going to get pronounced. And if you are, someone, let's say ETH futures gets approved, if you're someone that runs just a milquetoast technology ETF, you're going to throw ETH in there just because it's a really unique asset and you can say that that's something that you're part of. And so I think, whether you look at the Bitcoin ETF or the Ethereum ETF, you have to compare them historically. Look at the ETF of palladium, look at the ETF of silver, look at the ETF of copper, look at the ETF of gold. These are huge moments if you look at the price chart of them, these are huge moments for the, frankly, price of these assets historically. And some people say the ETFs might be sell the news if they happen. I really don't think it's possible to estimate the amount of demand that is there when someone like a BlackRock really starts pushing. And so I think ETH is super interesting. I think Bitcoin is interesting. Frankly, we don't own any. We're tech people. I view these things as tech assets. If I thought there were better tech assets, I would buy them. But I just think that these crypto assets are the most interesting ones that you can buy right now. In terms of altcoins, I think that the difference between today and 2021 is that you could be the 6th largest DEX in 2021 and you could still be a unicorn. That was not sustainable. It fractured the market. It wasn't good for the incumbents. It frankly wasn't good for innovation either. Now it's, each category that you look at, whether it be liquid staking, whether it be stablecoins, whether it be trading, you have at least a multi-billion-dollar player as the incumbent in that category. And they're growing and they're compounding. And I think to a certain extent, seeing is believing for those ones. And there's just a few high-quality assets with fundamentals that, frankly, like as an asset manager, you can buy and have rationale for. The rest of it is a bit more speculative. And, we do play in the more speculative areas, things like games, but only things that really have like a strong lever to retail usage and participation. And so I think it's kind of a token pickers market right now. But if you have a 3-year time horizon, which is generally what we try to hold everything for on the liquid side, I think you'll do okay.
Thanks for that, Vance. David, and I know that David actually had Vance, for your color. David had a good piece that was widely distributed here that was talking about scaling L2s for ETH and whether or not those growth of L2s could actually end up eating ETH's lunch. So Vance, I'm curious, can you opine on the state of scaling L2s and the impact growth and kind of that economic activity on L2s would have for the future financial prospects for ETH, in your opinion?
Yeah, so it's great that we're scaling ETH. It'll enable so many more retail users that don't want to pay high fees in a bull market to come on and play a game on an L2. And the L2, it does post call data to the L1. It burns ETH. It uses ETH to actually, validate the transactions that they have. I think on the last day I checked, ZK Sync had 50 ETH of fees for one day that was given to Ethereum holders. Like that's a meaningful contribution. And you should kind of think about the future of Ethereum as probably like 1,000 to 10,000 L2s that are doing, 1 to 10 ETH in fees per day that's given to the ETH stakers. But the way that you should think about the L1 is that it's just the super sticky stuff. So like the 40 billion or maybe it's 35 billion of DeFi assets that are locked in DeFi, those are not leaving L1 ever. And those are a substantial majority of a lot of the fees that are created. Uniswap, the main trading venue for all altcoins, or at least like on-chain altcoins being on ETH L1, that's not going anywhere. Those are put there for a reason. It's the access to the most capital, the most users, the most liquidity. Like that's not going to go anywhere. Same with the NFTs. Bored Apes is not migrating to an L2. Punk's not migrating to an L2. DGOD's just migrated to ETH L1. So like there's a lot of very sticky demand. And frankly, like I view ETH as the NASDAQ of crypto. That's where all the main assets want to be because it just, it's the most liquidity, the most eyes, the most users. So I think long-term ETH's fees are pretty defensible. Short-term or medium-term, it's hard to value the L2s on anything other than just like a traditional technology basis. ETH, you can argue there's a monetary premium in there just because it is used as money and it's used as staking, and it's used so many different ways that it has some sort of other valuation component to it. The L2s, I think you should just view those as straight up technology assets. But if you look at Base, and I think it's cooled off a little bit since then, there was 83, or it was on a run rate for $83 million of fees for a full year. Maybe that halves, or gets cut by a third or 2/3, but that's still a very big business, and something that at least for Coinbase, as you guys know, contributes to your bottom line. So yeah, that's my perspective.
Cool. Yeah, thank you so much. Greg, I know you wanted to chat a little bit more about flows.
Actually, I have another question for Vance. So it's great to hear you're an ETH mega whale, or would you call yourself an ETH maxi though? Are there other L1s that you're interested in when you look at the landscape?
I wouldn't call myself an ETH maxi. I wouldn't call myself a maxi of anything. I'm a pragmatist. I do believe that what ETH in crypto is doing is very noble, and it's a worthwhile mission, and it can benefit a lot of people. But if there was a different chain that did things differently than ETH, in a better way, I would be open to it. But frankly, it's just so path dependent on what ETH is today versus everything else. It's been through this up and down. It's been from proof of work to proof of stake. It has the confidence of people staking it, the confidence of people using it in DeFi. That is just the thing. It's more of the behavioral component that's been unable to be replicated anywhere. Like the culture of Ethereum, all the NFTs, the fact that people want to pay, hundreds of thousands of dollars for a monkey JPEG. That's the monkey JPEG for sure, but it's also got the provenance of being on ETH L1. And so, if somebody else was able to do that, I would be open to it. But that's like a decade plus journey. And frankly, the main casualty of the bear market has been all of these alt chains dying, or at least becoming less prominent. And frankly, a lot of them turning into L2s, which kind of tells you all you need to know about where Ethereum is relative to its competition.
Great. Yeah, I saw a Bloomberg chart that was talking about ETH fees versus price. I think that was circulated a lot on Twitter, and it's interesting to see how that ETH price performance has kind of not kept up relative to the fees. So good to know. Sid, bring you in here, given that you're the in-house guru of all things DeFi research. It's been a week since the base mainnet launch. Vance just mentioned the year run rate. I know we've seen some really nice things coming out of on-chain summer, such as Coca-Cola's inaugural NFT collection and other things. Sid, could you share a little bit with us metrics around base and what activity looks to be on-chain?
Yeah, definitely. I mean, it's been great. Pretty, so far, as we've spoken about a bit briefly in previous calls, also as Vance mentioned here. There's been close to $150 million of capital bridged over onto Base, and the on-chain summer, the Genesis NFT had 120,000 minters, which is pretty significant. And then even overall, there's several different NFT projects that have had mints, and there's been 386,000 mints overall on Base, and just today, there were 13, close to 14,000 unique minters. So pretty significant numbers for what's most people think is a PvP bear market. Where there's not that many people going around. There actually are, and most of them are actually engaging with these assets. Last week also saw a pretty popular app launch on Base. Is called friend.tech, which is a pretty interesting way of folks are speculating on Twitter usernames, and basically bidding them up and down. All interesting developments. It was also kind of novel because it emphasized the mobile aspect, which hasn't necessarily been a factor of popular dApps. So that was also interesting to see. And yeah, in contrasting to Base, I mean, other L2s have also been trying to gain traction in recent times, and it's been a mixed bag. Shibarium is one to call into attention lately. Shiba Inu's L2 launched with a bit of hijinks. There was a few technical issues on their end, and there's approximately $2 million worth of ETH and Bone stuck in their bridge at the moment. And yeah, we're just monitoring the situation across L2s right now, but very enthusiastic about the traction on Base, and really looking forward. I mean, today and tomorrow internally at Coinbase, we're having a hackathon where folks are trying to build dApps and interesting applications on top of Base, and looking forward to what other folks can develop as well. And this is something also to ask with Vance. I mean, what kind of apps are you kind of looking forward to seeing on L2s like Base?
I think the the main ones are games, and there's a pipeline of probably 100 games that launch in the next 6 months. And if just one of those hits, if one of those gets, and most free-to-play small games on mobile have about 1 to 2 million monthly active users. If one of those hits, that is an instant, very meaningful contribution to activity on the L2s, but also ETH-L1 in terms of, call data being posted there. And so I think that's going to be a huge theme. And seeing things like decentralized social starting to kind of take off in a small way, but a meaningful way, that's just something that I think we eventually need to build towards. I'm not sure when it'll really kind of enter its like investable arc for us, but I think that's going to be a huge contribution. And from the incumbent side, like I think people like Twitter starting to really lean into giving people access to NFTs, giving people access to crypto, trading crypto through the app. That's going to be a huge contributor as well. And I'm not sure where that happens, but I do think that if you were to build it from scratch, you'd probably have people do it non-custodially and on-chain. So I think there's a lot of different things that are going to happen, but I would say games are going to be a Q4, Q1 thing. Decentralized social is probably a little bit further out than that in terms of like it really taking off in terms of user scale and fees and things like that.
Yeah, Vance. So I guess I also agree, like apps offering easy on and off ramps, ability to buy and sell crypto within the app. I think that those have a lot of interesting ways to increase the flow of crypto assets. I guess I'm also curious, like, how do you picture decentralized, like what does decentralized gaming look to you? Is it that all activities of the game are happening on chain? Like how do you foresee that development to look?
Yeah, I think, it's not about everything being on chain. It's about creating a fun game that has some sort of economic aspect to it. And, most people play games their whole life and they don't get anything in return. And in fact, they just, they pay and they pay and they pay and they get, nothing other than spending their time there. If you give people unit economics and incentives to do things, they will do them, and you'll create more of a loyal community and you'll create more of a coordinated community. And that community will be your marketing team and your, basically distribution arm. And we've seen that a couple of times, flashes in the pan in the last bull cycles I mentioned with Axie. But, the idea is pretty simple. Would you rather play poker with fake money or real money? If you had the choice, would you get paid for some of your actions in the game, or would you just be this perpetual payer? And so whether it's a game where the economics are embedded in the assets that you buy, or whether it's a game that actually shares revenue and profits and decision-making with its users, there's a bunch of different paths. But the key thing that unites all of them is that the games need to be fun, but they also need to have, this like kind of money game aspect to them. And that's okay. Some people say that's speculation, whatever, but that is the same thing that underpins the hundreds of billions of dollars of collectibles that exist today, and they could trade it in the US. So I don't think it's necessarily too far of a departure from the existing behavior that exists.
Interesting. Yeah, I certainly hope that the next set of games that comes online, that these Web3 games are first and foremost fun. And I think putting in terms of in-game economics is, I think, a nice way to put it. George, on to you. I guess, what are you seeing in the market this week? What are some of the market headlines and news events that you're paying attention to?
So Say was certainly an interesting one. So another new layer one. So while everyone is focusing on the ETH ecosystem plays, it's certainly also interesting to see this mini L1 war reloaded, if you will. And it reminds me a little bit of, back the days of the bull market when that was a major narrative. And one comparison that I've heard a number of times is actually that we could end up with a future where we will have a number of different specialized L1s operating successfully next to each other. So similar to how essentially we have a number of different operating systems like Mac OS, Windows, Android, and iOS, and so on, each with their specific use cases. So I got a question for Vance, for you, actually. Vance, question for you on that. Actually, would love to hear your thoughts on that comparison between the operating systems and whether we could end up in such a future with having, a number of these different specialized L1s, or whether ETH will potentially eat everyone's lunch, as you mentioned, and also, whether we are to some extent saturated in the market. If you look at these low market cap, high FDV coins like Say, Sui, Aptos, or WorldCoin, for instance.
Yeah, I think, in the case of things like WorldCoin or Aptos or Sui, when you launch a coin at 30 billion or 20 billion, the direction of travel is probably down, just because the unlocks are so large relative to the market cap, relative to the natural buying. And it shouldn't be a big surprise that those things don't engender a strong community, a strong developer base, a sense of momentum, a sense of purpose. And, ETH obviously didn't launch at those high valuations, but it's been through the 100x up, 99% down cycle a few times. And I think, the asset is so strong as a result of that. And so, to the extent that these things do recover, that's the path that they will have to tread as well, where things are really volatile and people need to really kind of stand up and believe for the right reasons and, grin their teeth and bear it. But it's going to be a while for those things. And maybe there's enough retail euphoria to push these things up. But generally what I've noticed is outside of the majors, about 100 billion is the highest that you can get in terms of a sustainable market cap. And so if, I'm looking at something like WorldCoin where the upside is 3x and the downside is a lot, I think the professional investor set will have trouble with that as well. And so, I think my views are basically that ETH is going to win. And it's going to make a lot of the L1s, L2s, and ETH as an asset is going to be the most interesting thing that you can, hold. You can do a lot of different things with it. And I think, for firms like ours who are on chain and who are actually using our Ethereum, staking it, using it in DeFi, there just isn't anything really like it. And I think that's why it's just so interesting.
Thanks for those views, Vance. On ETH, we know that you're a self-proclaimed lover of ETH. So anyways, it's awesome. George, what else are you seeing?
Yeah, so looking at the price action, we had pretty much over the last week, another week of record low volatility and price consolidation. Obviously, a little bit of weakness in crypto over the last 48 hours. I think it's mostly driven by the equity sell-off, as Greg mentioned earlier. But, one interesting thing that has been pointed out over the last week is that 75% of all BTC in existence is now held by longer-term holders. And longer-term holders essentially meaning holders with holding periods of longer than 155 days. So I think it's definitely, an important fact, despite the lackluster price action recently. In terms of news stories that have been, top of mind and to some extent maybe driving the market, obviously the ETH futures ETF and the BTC ETFs still top of mind. So for BTC, the next dates to watch there are early September, the first September dates, and for the ETH futures ETF, the first round of decision dates comes up right around the middle of October. And obviously the potential grayscale ruling as well has been top of mind. And to me, certainly, if I look at the vol curves, it kind of almost feels like the market is almost sleeping on it. In Europe, actually, in the meantime, you had an asset management firm, Jacobi Asset Management, actually just launching the first BTC spot ETF just a couple of days ago. But, other than that, you can certainly feel that we are, in terms of flows, also as Greg mentioned, in the middle of holiday season with ETH gas prices and on-chain activity slowing down temporarily. ETH staking yields also down a little bit to 4.5%. But, I think generally speaking, especially for these ETH ecosystem plays, once we get closer to the Cancun upgrade, EIP 4844, and the ETH futures ETF, I think that could really be an important catalyst for all of these ecosystem and scaling plays.
Wonderful. Thank you, George. ETF still in focus. Looking forward to some decisions in the fall. Vance, turning to you. So talking about private markets, because we've talked a lot about the liquid stuff. Framework is, of course, a venture fund that partners with founders and builders as they build wonderful blockchain technologies to scale. Given that you're an SF, I'm also an SF, your access to interesting deal flow, I'm sure, is not limited only to crypto. So I'm sure you see a ton of other deals that come across your desk, such as AI, et cetera. So turning to private markets on the venture side, what are you seeing in terms of private market trends and funding? And what are the technologies that are most front of mind for you here?
Yeah. So I think the trends are that the valuations are coming down, and I think it's appropriate and it's welcome. And there's a lot of tough things happening as well. Startups are shutting down. People are having hard conversations about, do they have product market fit? And, what is the near term, long term prognosis for a team that may have a lot of cash, but doesn't really have a great idea of what to build or how to build it. And so things are improving in the private markets. Valuations are coming down, but there's a lot of companies that are doing pretty well. They have 5-10 million ARR, path to 100. May take a little bit, but that's kind of on the equity side. On the token side, I think the gaming side of the house still is the most interesting to us. People forget this, but Axie was a $60 billion token fully unlocked for investors at the top of the last cycle. If you hit a game and you get a lot of users, you really, we don't know how big these outcomes can be or don't fully appreciate them. And so we're still heavily focused on the gaming side. We're not as focused on the infrastructure side, frankly. I know a lot of firms do L2s, L1s, infrastructure. My point of view is that we already have all the infrastructure. We just need the applications. And I think historically there's been a bias to, investing in L1 tokens because the comp, in terms of Ethereum is just so large that if you hit something that gets 10% of the market share, it's going to be very successful. But I think generally, games, DeFi, even things like decentralized social or decentralized physical infrastructure, those are the things that we're most focused on. And so I think that's the crypto side of the house. In terms of the other stuff that we see, just being in San Francisco, it's maybe this is too bearish of a take, but it does feel like the wave of Web 2 is really crested in terms of, how many more marketplace businesses do we need? How many more SaaS companies do we really need? The internet is also in a very different place than it was 10 years ago, where if you're, an incumbent, have distribution, you have cross-selling ability. There is not as much green field for startups to compete in the traditional vanilla Web 2 technology categories. And so, that leads to people being excited about things like AI. And AI, if you look at Google Analytics results of, ChatGPT searches, it's down probably 80%. And I don't think people have kind of found that app use case, whatever you want to call it, for AI quite yet, but everyone seems to be, pinning all their hopes and dreams and next funds on this. And that's kind of a dangerous position to be in my opinion. And I just look at crypto and I just see, projects that are delivering, projects that are spitting off free cash flow, projects that are very undervalued. I think it's obvious for us that if there was something else that we could invest in that would be, more productive for our LPs, we would do it. But frankly, just crypto is the most interesting and I think just the most high upside category that exists today. And nobody's paying attention to it. There's literally no competition anymore. All of the traditional Web 2 funds have gone, the way of the dinosaur. They've given up on crypto. They fired their crypto teams, all that stuff. And to me, that's just great. More for us.
Wonderful. Yeah, we're still here and kicking. So that's awesome. And I think from my view too, as well, on the technology side, it's almost like when everyone is positioned one way and everybody's moving in one direction, which is the AI train, things can start to get to look very crowded, and that exuberance can lead to paying up for tech that potentially, just because you call it an AI, just because you use the two letters, what does that really mean? And then things look very expensive. So I guess to close, because we've had a very good conversation here, I think it'd be wonderful to get your forward-looking view. I'll preface this question with some background. So one thing I pay a lot of attention to is reading the tea leaves around kind of the intentions of traditional companies and traditional financial firms to integrate blockchain technologies into their future product roadmaps. So the things that we're seeing with PayPal and PayPal USD, the things we're seeing with Visa talking about ways to make ETH gas fees and paying for those gas fees easier. I feel like as we start to see more and more of these sorts of headlines with traditional firms really getting into this space, I feel like my last question to you is, what are the implications you're most watching for, particularly as Web 2 companies, for instance, start to show some interest again in getting into Web 3? Which blockchains will, I guess, be the biggest beneficiaries of this movement on chain?
So, I mean, talking to people in TradFi, in very large prop shops, in hedge funds, in asset managers, they understand tokenization immediately. They understand why it's powerful. They can lower the minimums on their funds. They can charge them less fees. It's less expensive. They're able to access some of the composability and transparency in terms of logging, reporting, auditing. And so I think, when I think about incumbent companies that are really interested in crypto, people like BlackRock, people like, you can't name too many names, but those are the folks who are going to put things on chain in size over the next year. And if you think about it, why haven't we tokenized things before? Why haven't we tokenized stocks? Why haven't we tokenized fixed income? Why haven't we tokenized any of that? The answer is that fixed income was just fundamentally not interesting for the past 15 years. Interest rates were at zero. Like, we could put T-bills on chain, but we already had stable coins. And so we have this really nice window, and this happens every crypto cycle, where Ethereum specifically is just this black hole for assets. Last bull cycle, we invented stablecoins, and we brought $100 billion of them on chain. And sure, some of them, have left, but we're still about $100 billion right now in stablecoins overall. And those things aren't really leaving. And so we have the opportunity to do that with fixed income now. And fixed income, that can lead to very interesting other things, stocks, other tokenized financial products, and those are coming. And I think those are going to come to ETH-L1 just because people want that nuclear grade, if half the country blows up, these things are still going to be on chain and accessible, and, Ethereum will still run. And so I think that's kind of like a very concrete value prop. I think X is going to do something interesting with crypto. I don't know what. I think, the main chains of ETH is kind of the only game in town at this point. Like, I don't know where else they would put things. Like, that will be a major beneficiary. And then I think the L2s will probably be beneficiaries of games, and then ETH will be beneficiary of that as a function of the L2 post and call data. So in my mind, all roads kind of lead back to ETH. But I think crypto's in a really good spot. I think, this is like, August is always kind of when financial accidents happen. And, it's not really a surprise to me that we're in this position right now where things are globally looking a little bit shaky. Crypto is being pretty volatile. But, it's not really interesting to think about what's going on right now. You have to think about what's going on in a year. And I think in a year, things are going to look a lot different. The narratives are going to look a lot different. The macro is going to look a lot different. And we're just going to have the time to bring games on chain, to tokenize assets, to scale and develop the blockchains that I think if you are bearish, the reasons that I've typically heard are, this is a scam, which is just like an emotional argument. Or like, SBF is bad, which is again like an emotional argument. I don't really think the critics of crypto are necessarily as strong in terms of their logic versus like the people who are bullish for the right reasons. There's people who are bullish for the wrong reasons for sure. But I think, the best time to invest in something is when nobody else believes in it. The corollary of that is that you have to know why. And so I think if you spend enough time in crypto, you can generally understand why. And that's what I focus my time in. The past, I guess it's been, about a year since Luna blew up and, started the downward spiral since we've recovered from that. But that's kind of how I've thought about my time.
Perfect. With that mic drop and closing this on a bullish note, Vance, thanks so much for joining us today. We all really enjoyed our discussion and picking your brain here a bit more about the various different topics that we talked about. Please don't be a stranger. We hope to have you back here as a guest down the road.
Awesome. Thank you so much. Appreciate it.
Thank you, Vance. And a big thank you to everyone who joined us for this week's episode. That's it from us here in the studio. We hope you have a wonderful rest of your week. Stay cool in this blistering heat. Thank you very much.